Volatility is brewing. Let's move to the next slide. Where do we start, man? I mean, Dow, Nasdaq, and Russell are down for the third straight week. I'm sorry, S&P, Nasdaq, and Russell are down for the third straight week. Dow is the only one that isn't down 2 weeks in a row, but it's still down 2 out of 3. Of course, it's all about the tariffs. And one of the things that's been interesting to watch is the dollar. The dollar has the longest losing streak since September. It's down 3% since last week. And what do you make about bonds? I mean, is there emergency cut coming or something like that? Because it looks as though the way that they've been moving, it's so crazy. Traders are now pricing a 51% chance of a Fed rate cut in May. And now they're pricing like 3 potential cuts versus like 1 cut a month ago or so. Jobs report. Look, I'm not surprised. It didn't really do much for us today. Now it showed 151,000 were added in February, which is less than expected, but not as bad as feared. Tom and I were talking about this yesterday after the close. It was almost 100 points priced in for a move today. Of course, the day is not over, but we saw a little bit of bump after the report, and then it faded. And then, of course, VIX is in backwardation. The futures are. If VIX cash holds this level or higher, it would be the highest closing level since the 2023 banking crisis, which obviously was a very nerve-wracking time. So before I move to the pictures here, what do you guys think about all this volatility we got going on in the market right now?
Well, I mean, listen, it's great for new trades. It's horrible for existing trades. This is the life that we lead, right? I mean, as long as you keep your delta in check, I don't really think you've even gotten paid yet. I know I haven't gotten paid yet on a lot of my positions, but I've added a lot of new positions. So it's been good for trading. Hasn't been good for my P&L yet. I haven't caught the down move as well as I would have thought.
Yeah, it hasn't been a great P&L move. I got to tell you, getting a little chopped up in here. I thought probably a little more downside than we expected. We just haven't seen this in a while.
I mean, don't you think it's a little weird when we see markets down as much as they have been and the dollar down the way that it has been more recently? I just find that a little strange. Not to mention, for a while there, at least, it made sense that bonds were going up for at least a little while there, but the last 3 days, they of course retreated as well. So it's just everything is like really strange right now.
Well, I don't think strange is the right adjective. It's the opposite of what we had the last few years, where we had a strong dollar and a market going higher. And now you got a little bit of a weaker dollar and the market going lower. I think it's kind of one of the biggest tells. Maybe the currencies are the look here on when we kind of make a little bit of a floor in the market. And so far, currencies are saying we're not there. Volatility is saying we're not there either.
Yeah, that's a good point. So this is VVIX and VIX plotted on the same chart over the last 2 years. I just pointed out a couple of things here just to kind of put it in context. Yesterday, yesterday VIX at one point was over 25, VVIX was over 125, but by the end of the day, VVIX was still above 120 and VIX above 25. We haven't seen that a whole lot of times over the last few years, although it's been quite a few clustered in the last few months here. You got the Fed meeting last year. You got the election time period last year. You got September of last year, early September. You got early August of last year. So a couple of clusters there. But then other than that, I mean, you have to go back to October of 2023, which really escapes me what happened at that time period. And in March, again, the banking crisis and the regional banking crisis in March 13th of 2023. All that said, last close for VIX above 30. October 19th of 2022, last close for VIX above 40, October 8th, 2020. So it's been a while since we've had those type of closes, right? Just to keep in mind. But we got a couple of clusters here. We got a couple of areas to reflect back on when vols were this high, and we survived them all. So just something to think about.
And we will survive this one. It's always the worst when you're in the midst of it.
The only thing is like this one has been total big time news driven, right? And it's been the will they, the won't they, all tariffs on and off, and that I think that's probably the biggest frustration here and there. Other times it just seemed like there was the unwind, right, in August, the unwind, and the unwind eventually like rolls around. It's just been this whole back and forth, obviously, with a lot of headlines more recently, which is frustrating. Another way to look at volatility, I really like this one. When you look at high to low ranges, and again, just kind of showing you how volatility is clustered here yesterday. You can look at it on the right side, we got it in SPX points. On the left side, we got it in percentages, but basically a 2% range from high to low yesterday. Just throughout this week, we had a 2.5%. You had a 3% range in markets. So they've definitely been all over the place. And obviously that makes it a little bit tougher, right, for us, the way we trade with all these big swings. But eventually things calm down. The markets can't take these type of swings for so long. Eventually we got to calm down. It's just a matter of when, really. But some big swings here, man. When you look at them, obviously it mirrors the chart that we just looked at.
Yeah, these are they're not going to be able to maintain these swings, but yeah.
I mean, they've been crazy. They've been wild. Implied correlations we often look at. This is just 1 month implied versus VIX. Obviously, you can see how these sort of move together quite often. And basically, when you see implied correlations rise, obviously the gap between what's going on with single stocks and what's going on with index is narrowing, and they're basically doing a lot of the same thing. We've seen, as a matter of fact, let's move to the next slide. The other thing is just looking at a few various other things. We know what equities are doing. We know what indexes are doing. A few other things here. Got you a little legend here for you on the left. Nat gas, gold are in the green on the year. Soybeans and corn are like, right now. And obviously there's going to be a lot going on with those. We can talk about agricultural products. And then yields, 10-year yields are down on the year. Oil's down on the year. Bitcoin's down on the year. So real mixed bag here when you're talking about a lot of the things that we typically look at and trade. A lot going on. Nat gas is really kicking me in the butt right now, but I'll deal with it eventually.
Yeah, nat gas is a big product. We talk about that all the time. Nat gas is not for the faint of heart, and it really is kind of a directional trade.
But yeah, mixed bag here for a lot of the different things that we pay attention to throughout trading.
Yep.
Let's go to the last slide here. ECB, while we're keeping rates steady for the most part, ECB lowered rates 25 basis points to 2.5%. They're saying that their cutting phase may be coming soon. Things are going well in their economy, they seem, but it's their 6th rate cut since June. Walgreens finally and officially got purchased by Sycamore Partners for about an 8% premium to the Thursday closing price. Marvell, man, that got dropped on earnings and is the largest one-day drop since 2001. On the flip side with chips, AVGO rallied, and it seems to still be up on earnings after AI growth fuels the upbeat forecast. For next week, we got CPI and PPI. I don't know how much those even matter anymore. I'm starting to wonder. I don't know if they will. Just like job support, I don't think it really mattered a whole lot today.
It had no impact today. I mean, bonds are pretty much the same price, and S&Ps are lower. They were up initially, but couldn't hold it.
Mm-hmm. I kind of figured that was going to be the case. I mean, how could it when, all these moves, we just showed you all these moves in volatility and all these swings, 100% due to all this tariff talk. So I just didn't really think this thing would matter this morning. Research, March 5th, OJ, leveraging liquidity for lasting growth is a pretty good one. Take a look at that.